Hello, this is Manish Patel from Ichimoku Trade. Today is March 2nd. What we're doing is we're giving you a quick market update. The reason why is the market's been going down for the last couple of days. You're probably hearing all kinds of things in the news, how we're going to retest the low, and the markets may go lower, and all this chaos and stuff like that. We don't listen to any of that. We pretty much look at the charts. If you remember a couple of weeks ago, I showed you a video on how we use the VIX to predict when the markets got to a top and when the market's starting going down. Remember, the VIX has an inverse relationship to the markets. So if the VIX goes up, the S&P and the Dow and the NASDAQ pretty much go down. So here's a chart for the weekly time frame. And you could kind of see here is that we have a major support here for the VIX at 1595 that's holding. It held there, bounced off there, and the VIX is now starting to go up, which is pretty much why the market's going down. The next major resistance is about 2947, which is right about there. So we got a high probability within today and the next couple of days, or even today, to get there. Because the markets are down right now on the E-mini S&P 500 futures, indicating that we're going to open up down. So if we do, we probably have a high probability getting to this level here, and where we close by the end of the week is going to matter. Okay, and that's what we're going to be looking at the end of Friday, which is pretty much today. If you look here, a lot of people try to figure out what influences the market for the VIX to go up or go down. When the VIX was going down, pretty much all the lower time frames went down. The only time frame that didn't sit there and go bearish when the VIX was going down was the 240 minute. So this is the controlling time frame. So when you get a bullish or bearish setup on this time frame, that's going to dictate what's going to happen with the VIX in the weekly time frame and the daily and so forth. So you could see right now that basically, remember, when prices below the cloud were bearish, prices above the cloud were bullish. When the VIX was going down, we barely went bearish here, and basically formed a pivot, and now we're doing the pullback. The pullback is somewhere around here. The question is, what's going to happen here? The bearish breakout is going to be here, so this, if it pretty much comes down here, this is when it's going to go bearish. But either way, what we're doing is we're looking for the 240 minute for trade setups, and when they occur on a breakout level, that's telling us what's going to influence the weekly time frame. Okay, reason why is if you look at the 60 minute, right here, you could see it's above the cloud now. However, momentum is still not bullish at all. So this right here, even though there's setup here, in order for this setup to trigger, it's got to be here. And if you look at it, where's the max or the minimum it's going to go is up to here. So that's kind of what we're looking at here, is to see the 60 minute to kind of get to this level, and then watch the 60 minute and lower time frames to see exactly what's going to happen. If it breaks that level, then we're definitely going to come back up to this level here. If it holds this level, we're going to pretty much come back down to this level here. So we're looking at the 60 minutes and the 240 minutes to kind of get a view on what's going to happen by the end of today. Here's the E-mini S&P 500 futures on the weekly, and this is the levels that we had drawn a while back ago. You could see the support right here, which is roughly about 26.43.25 is right there. We're trying to get down to that level now. The resistance here, which we've been pretty much holding, is around 27.50. So this is the range of the S&P 500. But you could see overall, this is still a bullish trend here, and it's remained intact. If we close below the support here, it just means the market's going through a major pullback overall. However, for the long-term picture, the U.S. stock market is still very, very bullish. It could be consolidating bullish eventually, but this is a very, very strong trend, and really, if you look at it, it really has not had much of a pullback at all. And you could see here, every time we got into this green line here, we had a little bleep, which is right there. And so the first time we're actually consolidating around this level here compared to before. We kind of did a little bleep here and back in 2016. That's it. But you could kind of see here, it was very erratic here back in 2015. But really, this, after we started the trend here, this big major trend here, we really have not gone for a pullback at all, except from last year back in November is the last time we have. So we pretty much and that was November of 2016 is when we went for a medium pullback. A medium pullback is to the green line. If we penetrate the green line, then it's a major one. So you can see that we haven't had a major pullback at all for a long time. The last time we had a medium pullback was back in 2016, November 2016. So it's been a while, and it's actually healthy for a natural trend on a long-term basis. So don't sit there and freak out. Remember, this is more of a long-term picture now. So if you're day trading or anything, just be careful. Swing trading, be careful. Right now, you should be thinking long-term, finding positions for long-term. This is the first medium slash possibly a major pullback that we've gone through. So this is a chance for these people to sit there and set up for their trades for long-term. Thank you. If you guys have any questions, you can email us at info@eiicapital.com. All our disclaimer rights are pretty much there. Basically state this is for education use only. We're not soliciting to buy or sell any particular instrument. If you do so, you're doing it at your own risk. We are broker and chart neutral. Today we use TradingView, but we can pretty much use any other charting package out there. Thank you.